Hello everyone, welcome to Blue Dragon Actual. Now today my initial thought process was I should go with the ALSM regulation, which is the most important regulation. If you, especially if you want to become an appointed actuary, so that is the most important regulation. However, before doing that, I thought there are a couple of things that we need to understand. One position is assumptions, how we are kind of determining the MAD or the pads in the assumption, MADs or pads, etc. So that is kind of given by APS 7. Then there is solvency position. There is a section on solvency which is kind of given by form KT. I have also referred to that prior, like before that. And there is also, we need to cover the preparation of financial statements, IRDA 2002 regulation. So after covering that, then going to LSF would make sense. Otherwise, I mean, there are various topics that have to keep on saying that I'll cover that in the next week. I'll cover that in the next week. So I'll start with the APS 3, which is not a regulation, but it is an actual practice standard which is issued by IAI, Institute of Actuaries of India, and it is related to the future solvency or the current solvency as well. Basically, it is related to the solvency position. And yeah, so it's not a big one. As you can see, it's a 4-page APS, right? And we'll follow the same approach. I'll first explain my own understanding and my own from my own memory, and then I'll go through the the APS just to have a double revision of sort. Now here, any question related to solvency, and solvency is a very important point. We have also seen how capital is kind of related to solvency in our chapter, right? So solvency projection is a very important point, and this is the APS, which is kind of, that important, and it is also one of the most questioned APS in SA2. I mean, I think I could remember 3 or 4 times the questions have come there, and also there are several answers where you can base your answers as which is this APS. So yeah, without wasting much time, so let's move on to APS 3, which is also known as the Financial Condition Report. So Section 13 of the Insurance Act requires that any insurer carrying a life insurance business in India should any insurer carrying a life insurance business in India should kind of go with uh, investigation or carry out investigation, and that investigation should be carried out by an actuary who shall be the appointed actuary of the insurer, and that would be as per the provisions of IRD Actual Report and Abstract 2000. Now, actual report and abstract is another regulation. It kinds of has the forms and the formats in which it has to be, like the returns and the files and the financial statement has to be filed by the insurer to IRDA. So that is the actual report and abstract. It's not that important. Only one section of that, because it's only the like tables and different formatting representation in which the files are to be kind of sent to IRDA. Only one form is important, which is form KT, which is kind of deals with the solvency ratio, and we'll see that in part of as part of ALSM regulation also we can see that. So anyways, moving back to the main topic. The appointed actuary shall be required to provide an assessment of the current solvency position as well as the future solvency position. Now, while statutory reporting, so we all know that there are two types of reporting, right? In life insurance, one is statutory reporting and one is shareholder reporting. So in statutory reporting, the reports are made to the regulator. Now, right now, with the advent of IFRS 17, there might be in future there might be only one reporting, because shareholder reporting will not make that sense, because I think CSM would capture everything in IFRS 17. But right now, especially in India, there are two types of reporting. Now, statutory reporting, as I mentioned, the files and the formats, etc., those are in the format that is kind of prescribed by ARA, IRDA ARA regulation, that is actual report and abstract regulation 2000. However, the purpose of this APS is to kind of guide the actuary to the format and the contents of the financial condition report. Now, the financial condition report shall be addressed to the board of directors. Right? It is not addressed to the regulator. It is addressed to the board of directors, and it should be made available in a form so that it is accessible to its readers, and it should not be should not hide or conceal important issues because of factors such as undue length or complexity of the report. And upon actually is required to provide an executive summary highlighting all the important issues. Now, there was a point of time when I was kind of working in a Indian company. So this financial condition report was like I created the financial condition report. It was the appointed actually don't do much. It has to be done by junior level employees only, and the appointed actually should just go through it and they see. So I think the executive summary was very important. I just remembered that because I mean I submitted that changing everything, but I didn't change the executive summary, and the person who was kind of in charge told me that yeah, you have to be kind of careful, you have not updated the executive summary. The rest of the document is updated, but the executive summary is not updated. So that's why I recollect that point, and yeah, it's I mean, yeah, it's normally the board of directors would not have time to kind of go through the entire report, because we, in this case, we shock different assumptions and try to see how the impact is. But then the board would just want to look at the executive summary and try to gauge what the impact is. Anyways, coming back to the main topic. So the appointed actually would require to assess the external environment conditions and the particular circumstances of the company, and so whether the company or the life office would be able to protect itself against those circumstances. And sometimes the combination of assumptions and their impact would be more important as compared to the effect of a single assumption. The opponent actually can use whatever techniques he or she thinks is appropriate to kind of assess the ability of the life office to withstand external changes in the external environment, as well as particular experience of the life insurance company. An opponent actually is not required to submit everything in the that is kind of called out in this report. Had the opponent actually kind of made some report to the board of directors earlier, also the opponent actually is required to suggest any suitable method so that these circumstances or the impact of these circumstances can be mitigated. Now, coming to the contents of the report, the contents of the reports are obviously it will contain the purpose of this report. And then remember the famous quotation that past is history, future is mystery, and present is a gift. So the content would consist of content would be something like that. So there will be a comment on present, there will be comment on history, and there will be a comment on future, right? So the first point would be any financial assessment of the environment the company is working on, any an assessment of the business environment in which the company is currently working on, any historical implication that might have financial significance for the company in the future, any historical developments such as method of sales, policy documentation, etc., that might have led to policyholder reasonable expectation being formed with financial implication for the company. And also there might be any planned future changes that might have financial significance for the company. So as I mentioned, the points are kind of centered around past, present, and future, because we are dealing with the current solvency and we are dealing with the future solvency in this report, right? Now, opponent actually should made greater comment on the methods and assumption used, and the assumptions which are important for the company should be called out from the assumptions which are not, and also the assumptions which are kind of within the control of the company should be separated from assumptions which are not within the control of the company. As for example, inflation, interest rate, these are not within these are economic assumptions, this depends on the economy. So these are not within the control of the company. So this is where we kind of, like as I mentioned, when I was working there, so I was kind of shocking mortality by 20%, shocking lapse or shocking expense, just to see if I change the assumption and there is a significant fall or changing the equity. So if there is a significant fall in something significant adverse event, does the company has the ability to kind of withstand those kind of changes? So that's what this APS is all about. Anyways, so actually I also has to kind of justify if there is a deviation in the methods and assumption from the previous time this was published, any inadequacies in his or analysis, for example, any due to lack of data, a lack of ability of data, or for any other reason, the differing nature of the assumptions as compared to the last time, and the extent to which it can be relied upon, any significant deviation from the recent experience, like that is comparison between expected and actual, and the reason for such deviance, and any unusual characteristic which is of financial significance of the existing business or the new business. Comments might be also made on the following aspects: any financially significant reinsurance, use of derivatives and of their purpose and in their financial significance, any post balance sheet events that might have financial implication, any proposed or planned changes in the existing business environment, new business environment, or the proposed product design, any changes in the operational method of the life insurance company. Also, the appointed actuary is required to pay greater attention to the concentration of asset in a particular area, because more the exposure in a particular area, there is a more risk. We have also learned in derivative post circular that there is a limit on the exposure on single issuer or a group of issuer or a particular industry. You cannot have as much exposure as you like, right? So there is a limit on that exposure. So similarly, concentration of asset in a particular areas, derivatives. So here we see how financially significant derivatives can be and how it can contribute to risk. Right? Then impending claims and litigation. There might be huge claim and there might be litigation around it. So that might result in a lot of payment for the company. Any unusual features of the source of new business, loss of a distribution channel, the impact of guarantees and options on the policyholder liabilities. Right? The appointed actuary should consider all the scenarios and should present all the elements of the liabilities. And also that appointed actuary, if they found, if the appointed actuary found some area which might lead to some crisis for the or insolvency for the company, then that portion should find prominence in the report. And that portion should find prominence in the report, and that should be any way by which those actions can be remedied, can be should be communicated to the board of directors by the appointed actuary. Yeah, so I think, yeah, that's it. I think I missed one point, but let's go through the APS. So section 13, as I mentioned, require every insurer to carry out life insurance business in respect of the life insurance business transacted by him. You can see the language is slightly difficult and it's written in that kind of legal language. It cause an investigation to be made by appointed actuary who shall be into the financial condition as per the provision of section abstract regulation 2000. Simply speaking, the appointed actuary should carry out an investigation into the financial condition. It is advisable appointed actuary to provide to the board of directors with more extensive and written report on the solvency position, current solvency position, and the future development. Right. So we've covered this. The statutory report will be in the format of ARA 2000, but purpose of this APS is to suggest suitable format and contents for financial condition report. It is addressed to the board of directors. It is essential the report is expressed in a form in which it is accessible to its readers and does not conceal important issues because of any reasons its undue length or complexity. Right. And appointed actuary should also provide an executive summary, which is where I kind of gave you that story. In this report, the appointed actuary shall assess the ability of the life office to assess changes in external economic environment and particular experience. Sometimes combination of two or more assumptions might be more important. So this is where you can shock both assumptions simultaneously. As for example, just to see if there is any selective lapse. So you can shock mortality and lapse the same time, right? So appointed actually should use whatever techniques he or she considers appropriate to the business written by their office to assess the ability to withstand changes the external environment and particular experience. The appointed actuary should address the issue of what actions are often to appointed actuary for to deal with those particular circumstances. It is not essential the single report should cover all the items, provided the appointed actuary has reported back to the board on the aspects before. Right. Now this is where that the quotation comes in, the past, present, and future. The purpose of the report assessment of the financial position of the office at the time in which the investigation is carried out, and also there is the review of the business environment and the business in which it is operating. So these are the present point, right? Then there are two historical point, historical development of the libraries, which may have implication for the future. Comments on particular aspects of the historical development, such as life office, such as policy condition, prospectus, etc. Right? And review of the financial investigation with special reference to any future external factors that present a threat to the life insurance company's financial security. I think I kind of misspoke about this point. It should be about threat, right? The future condition which represent threat. The appointed actually should comment on greater detail on method and assumptions. The assumptions which are important should be called out from the assumptions which are not, and assumptions which are within the control of the company should be separated from the assumptions which are dependent on external situation. Changes made to the methods and assumption, and inadequacies in the analysis, differing nature of the assumption, and the extent to which they can be relied upon, how the assumption might compare with the recent experience, any specific financial characteristic with the existing business and new business, as any unusual feature of the existing and new business, any financially significant reinsurance, effect of planned or known changes in the life of its method of operation, any use made of life of its derivatives, its purpose, financial significance, post balance sheet events. So I've covered all of this point, and the opponent actually needs to be vigilant about concentration of particular areas, derivatives, asset backing, unusual provisions which may be susceptible to particular risk. So I think this is the point that I missed. I think I've covered all other points. Sources of new business which have unusual characteristic, impending major claims, so risk arising out of product literature and documentation. This is also another point I have missed. So assets containing unusual provisions which may be susceptible to particular risk, and risk arising from policy literature or documentation, loss of distribution channel, and the impact of policy options and guarantees. And in such scenario tested, the appointed actuary should provide for all elements of statutory liability. If the appointed actuary identifies situation, set of situation lead to financial difficulty, and then the appointed actuary should make special prominence in that report. That situation should get special prominence, and any recommendation as to what might be done to avoid such circumstances. So that's it, short and simple. And this is the financial condition report. Now next would be the preparation of financial statements and the mads and pads. I think both are kind of related, and obviously all three of this are related to the ALSM regulations. So ALSM regulation is the most important regulation, as I kept on saying. And so I'll stop for today. If you like the content, if you are learning something, and this is exactly what we do in core companies, right? This is exactly what we do in uh, outside companies, in Indian companies, because these are the base of every valuation work or modeling work, and that's how we work. So if we just go by books, will get restricted to a particular level, because this is a financial certification in book. You will only learn up to a certain degree, but you need to kind of use that learning in a financial software to kind of understand what is going on. So the book are just a way to get you up to that level so that you can work uh, on practical situation. After that, it is your work knowledge that is going to take you further, right? So these are those regulations or standards in which everything that you work on will depend on. It will not depend on what you have learned in city 5. No one will expect you to use manual calculation to kind of calculate reserve. Your profit or your GGO access or Moses will calculate your reserve for you. However, what you have to understand is what is the background of it, what is the regulation, why that's why something is getting used, why from this entire solvency thing you can see how important solvency is and what are the ways they are kind of checking if the solvency. They are looking at the history, they're looking at the future, they're looking at the present, they're looking at the assumptions, they're looking at the derivatives, they're looking even at the operation, right? They're looking at the characteristic of the business. So there are so many things that you are looking at, and imagine having all those points at the back of your head when you are writing an answer on solvency. You can easily generate more points. So that's the goal. You have to understand this the purpose of this regulation, and then you have to kind of use that regulation not only in your exam but more importantly in your practical workings. So please like, share, and subscribe. Provide any feedback in the comment section. And yeah, and see you in future videos.